And a lot is riding on April the 2nd and reciprocal tariffs. And if Chinese goods continue to get shut out of markets like the US, then they're going to be under pressure to export and redirect that excess capacity and exports to other markets. How much of an issue is that going to be in terms of the pressure that neighbouring countries or its trade partners could be under in this region, Albert?
Well, I think we have to look at the Chinese relationship with its neighboring countries in a comprehensive way. Obviously, if China is not able to export to the U.S., it will be seeking to divert exports to other countries, and China is obviously very competitive in producing many industrial products, producing goods at very low prices, but that's always been the case for many years. And I think what you have to remember, though, is that, as we saw in the first trade war, oftentimes other countries can have greater opportunities working with China. So, for instance, we know that Vietnamese exports to the U.S. increased quite a lot during the first Trump administration. And then that was also accompanied by an increase of the supply of intermediate inputs from China to Vietnam to support that increase in export. And it also has been accompanied by a lot of investment from China into other countries in the region. So 2023, we saw a huge increase in Chinese outbound FDI, much of it going to other parts of the region. And these are in areas, in sectors that are very strategic and very innovative. So in the new energy areas, in electric vehicles, in high-tech areas, in chips, in data centers, et cetera. These are areas where we're seeing a lot more Chinese investment out to other countries in the region, and I think that can really help many, especially the more competitive economies in the region, to develop very dynamic industries in these areas.
Bert, good to see you again. Always a pleasure having you on the show. Martin here. So, Bert, I want to cut to the chase and ask you, post-April the 2nd, reciprocal tariffs, etc., I mean, who knows what's going to happen? I guess it depends on which country you are and whether or not you've sort of cut a deal ahead of time before April the 2nd, or if you're able to cut one after April the 2nd. But, a lot of risks loom, and I'm wondering for this part of the world whether or not you think, or whether you see Asian countries increasingly setting up swap lines with each other as a way to protect themselves.
Well, there has been, I think, efforts in the region, especially in ASEAN and East Asia, to improve financial integration and to provide more flexible coordination and cooperation. We think that's very helpful. I think, if you look at the countries, if you take the description of reciprocal tariffs at face value, it's saying that if countries have higher tariffs on U.S. goods than the U.S. goods that the U.S. applies on them, then there's going to be a correction. And so by that measure, Japan, South Korea, India, and Thailand are countries which have trade surpluses with the U.S. and have higher tariffs on imports from the U.S. and so could be targeted. But then there are other countries that don't have very high tariffs but still have trade surpluses with the U.S., countries like Vietnam, and it's not really clear how they will be affected by the reciprocal tariff policy. But either way, I think what we've seen, I think really interestingly, is that most of trade and most of FDI now into Asia is coming from Asia. So the fact that the region kind of remains fairly open provides kind of a way for the region to be resilient. If that part of, since it's such a huge chunk now of the global economy, nearly half of global GDP, then at least in that part of the global economy, you can continue to really benefit from globalization by maintaining open regional trade and investment.